Geopolitical tensions felt like they were at a breaking point, but then, almost overnight, the market started signaling a huge shift. Today, we're going to decode this de-escalation and try to figure out what is really going on behind the scenes.
And that brings us to the big question on everyone's mind. Have we finally passed peak fear? Is this a genuine de-escalation we're seeing, or is it just the calm before another storm? That's what we're going to break down.
So this whole thing really kicked off with a very high-stakes, very public back and forth. First, you get a tweet from a world leader hinting at progress, and then, almost immediately, a sharp denial from the other side. You know, this kind of conflicting signal is exactly what sends markets into a tailspin.
So what are we looking at here? Is this a genuine sign of peak tension? Or is there a much more calculated political ploy happening right in front of us? To understand it, you have to look at what was said, and, maybe more importantly, what wasn't said.
Okay, so look at this. On one side, a U.S. leader's tweet announces that talks are progressing, military deadlines are being extended. But on the other side, an Iranian official comes out and flatly denies any direct negotiations are happening. I mean, these two statements look like they're in total opposition, so how could they both be true?
Well, the simple answer is that it's almost always more complicated. When you're dealing with high-stakes political negotiations, leaders often operate in, let's call them, half-truths. It gives them a way to signal to the other side without officially committing to anything. So yeah, maybe they're both telling their own version of the truth.
Okay, so if both sides have a good reason to spin their own version of reality, then we have to look deeper into their motivations. To really get to the bottom of this, we need to decode the game each player is involved in.
And what's really fascinating is how all their incentives might actually be lining up. For the U.S., there's a huge incentive to end this conflict before the midterm elections. In Iran, you have new leaders who want to negotiate to solidify their own power. And then there's the third major player, China, which is getting hammered by this instability and desperately needs things to calm down.
And this brings us to a very plausible theory. The talks are happening, but they're happening through an intermediary. This lets both the U.S. and Iran truthfully say they haven't had direct talks. In a country with deep ties to everyone involved, like Pakistan, which has major economic and military connections with China, fits that role absolutely perfectly.
All right, so that's the political theory. But, you know, words and diplomacy can be tricky. The hard data, on the other hand, tells its own story. So let's look at what the objective market indicators are telling us, because that's where the real money is flowing.
Our first and probably most important clue is the price of crude oil. It's really the main barometer for tension in the Persian Gulf. If things were truly getting worse, we'd see it here first, no question.
And look at this. After spiking to about $103 a barrel, oil has pulled back in a big way. It's now trading below that huge psychological level of $100. This tells you the market is pricing in a much lower risk of some catastrophic spike to 120.
Next up, the VIX. You probably know it as the market's fear index. It basically tells us how much anxiety and uncertainty is baked into the market. A high VIX means high fear. And what's crucial here is that the VIX has stayed firmly below that critical resistance level of 30. To put that in perspective, in a real crisis, this number can rocket up towards 40, 50, even 60. Staying below 30 is a powerful sign that the big money thinks tensions are actually easing, not getting worse. And finally, let's zoom out and look at the broader market feeling. The Fear and Greed Index gives us a great snapshot of the mood among everyday investors. You know, are they panicking or are they getting complacent?
Right now, the index is at 16, which is deep in extreme fear territory. But here's the kicker. Extreme fear is often a huge contrarian indicator. It suggests that pessimism has probably hit its peak, which is historically when market bottoms tend to form.
Politics and indicators are one thing, but if you really want to know what's happening, well, you have to follow the big money.
So, while all the headlines are screaming about conflict, and retail investors are, as we just saw, extremely fearful, what is the so-called smart money actually doing with its cash? The answer might just surprise you.
$1.5 billion. That's the size of a single trade on S&P 500 futures, basically a massive wager on the direction of the entire U.S. stock market that was placed right before the mood changed. This is not a casual trade. It's a monumental bet.
And here is the most crucial part, the timing. This gigantic buy order was executed just moments before that de-escalating tweet from the U.S. leader hit the internet. Coincidence? Maybe.
But in the world of high finance, billion-dollar coincidences are pretty rare.
A move this big isn't about making a quick buck on a little bounce. No way. This signals a very high-conviction belief that the worst is over. This is what you'd call a foundational position, a bet that the market has found its floor and a major rally is on its way.
And this just flies in the face of the mainstream story we've been hearing. I mean, look at the predictions from major banks back in April versus what actually happened. They were calling for $120 oil. It's under 100. They predicted 5% inflation. Expectations are now down at 2.6%. They were forecasting aggressive rate hikes. The market's barely pricing in one. The narrative was just plain wrong, and the data was right.
So, let's put all the pieces together: the political motivations, the market indicators, and the flow of smart money. What does all of this tell us about the market's next move?
Okay, so here's how this probably plays out. 1, the evidence strongly suggests the market floor is either already in or we're very, very close. 2, the final trigger for a major rally will probably be an official confirmation of negotiations from Iran. And 3, and this is so important, markets almost always make their bottom before peace is officially declared. By the time the good news is all over the headlines, it's often too late.
And that leaves us with one final thought. In an environment like this, just saturated with noise, with conflicting reports, and with narratives designed to get a reaction out of you, who are you going to trust? The sensational headlines or the cold, hard data? That's really the question to think about.